Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of February 10th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage here to give you an update. Well, last week was certainly a roller coaster ride for Maryland mortgage rates. If you look at the bond chart on the screen, that big green candle right there on Monday showed the bonds rallied to a high not seen since November, so we saw interest rates moving down for the last 2 weeks, but then stalled and the bonds sold off on Tuesday, and again on Wednesday in anticipation of a good jobs report coming out on Friday. Found a bottom on Thursday heading into the jobs report. We were recommending locking because everyone was predicting 175,000, 180,000 jobs to be created. Report came out Friday morning. It was a stinker. The bond rallied. You can see the giant green candle. But if you look, we were capped by that ceiling of resistance right there. Bonds were not able to push above that. If they do not push above that, they're going to be turned lower, and you'll see rates to start to move higher. So, if you did not lock your Maryland mortgage rate on Friday, as our recommendation was, then you can lock in Monday morning when rates come out, or you can cautiously float and see if we break above that layer of resistance. But if we get turned lower, you'd have to quickly switch to a locking stance. But no one would hate you if you locked in here and took advantage of these rates we haven't seen this low since November, because we are ripe for a pullback. All right, let's dig into that jobs report that came out on Friday. Only showed 113,000 new jobs created in January. Revised December only up by 1,000 to 75,000. So that's two bad jobs reports in a row. Not a good sign for the labor market. Now, unemployment did tick down from 6.7% to 6.6%. But that's not a good indicator of what's really going on, because the number ticked down not because people went back to work, but because people stopped looking for work and no longer counted in that figure. So a better number to look at is the labor force participation rate, which is stuck at a 35-year low at 63% of eligible workers are actually working and participating in the workforce. That number needs to go up to show that we're really putting people back to work. So that's the one we need to follow. And then on Thursday, to support all this, the weekly initial jobless claims came out at 331,000 claims. That's down from 351 the week before, but you can see we're stuck in this range of the 330s for jobless claims. We need to be below 300,000 to get people back to work. So we need to watch that. The Federal Reserve met and they announced that they are going to continue their tapering program. Their tapering of the QE3 asset purchase program for them buying treasuries and bonds. They tapered by another $10 billion for February. So if you remember, we were at $85 billion ending December. They tapered by $10 billion, so January they only bought $75 billion. February they're tapering again. They're only going to buy $65 billion of mortgage bonds and treasuries. Their goal is to keep tapering by $10 billion every 6 weeks when they meet, and then be done by the end of the year. Now, they did say if the economy gets off track, they could halt the tapering, but it looks like they're going to continue with the taper, and that is going to have an effect on mortgage rates. So mortgage rates will move up as the Fed pulls out from buying bonds. They're a huge player right now in the bond market, so as they pull back, we're going to notice it. We haven't noticed it right now because as they've pulled back buying, the number of loans has dropped significantly, so there's been no effect. But as they keep pulling back, we will see mortgage rates move up. So if you're looking to buy or refinance, you may get the lowest rate of the entire year right now. So get out there, get under contract. In housing news, CoreLogic reported that its home price index for December 2013 came out at 11% increase from the previous year. And that's the 22nd consecutive year-over-year increase gain in home prices nationally. Now, there was a drop of 0.1% of home prices from November to December, but year-over-year, definitely doing good. And then FHA came out with a long-awaited update. They are finally going to accept electronic signatures on loan documents. That's great news for lenders and for consumers. They can now do e-signatures on electronic documents. Primary Residential Mortgage is one of the very first mortgage companies to roll this out. We've been waiting for this. As soon as they said go, we went. We are live with electronic signatures February 10th. It's going to make everyone's life easier. And then a big update on USDA. The U.S. Senate and the House passed a farm bill. Legislation includes language to maintain the current USDA eligible areas. If you remember, the last update on USDA, they're going to change eligible areas October 1st, 2014 and go from the 2000 census to 2010 census. That would eliminate over 900 communities nationwide that are currently eligible, no longer be eligible. This farm bill has been sent to President Obama. If he signs it without changing anything, that they're going to extend the current eligible areas to 2020. That's huge. So we'll keep you updated on that. And then in the local news, the next free first-time homebuyer seminar is in Towson, Maryland, at the Sheraton Baltimore North Hotel on Delaney Road. That's from 10 a.m. to noon, and that is on February 22nd. You can register for that event by giving us a call in the office at 412-3319, or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.